Hi, this is Ed from SOS Bookkeeping. And in this video today, I'm going to attempt to answer the question, why do we bother keeping financial records? Well, the answer is, let's begin with the end in mind. As an owner, you want to keep your finger on the pulse of your business and to be prepared for filing your business tax return. As the owner, you want to know if you're profitable, where you're spending money and how much you're spending, and if you're collecting the money that is owed you. So the best way to do this is to keep an accurate set of books. Now, to begin with, let's talk about how or what tool you could use to accomplish that. Some people are still using spreadsheets to do this. And if you're a very small business, maybe a side business or just getting started, that might work. But I highly suggest that any business that has any revenue at all really should be using an accounting software. And they are free versions. They're not the best, but they're available. But you can get a very highly efficient and well-rounded software for as little as $15 or $20 a month. And you'll find it well worth it to save you time and effort and frustration in the process. So the three basic steps. It's track your income and expenses, and then reconcile your accounts at the end of the period, and then generate your financial reports. And then that process starts all over again. And if you're not getting the information that you need, you start making adjustments. I guess there's one other step in there that happens one time, and that is to create your chart of accounts. And this is based upon what information, this is what you have to think when you're creating your chart of accounts. What information do you want to see to help you determine the health of your business? You may have multiple streams of income. You may have different types of income. So these are things you want to consider when you're designing your chart of accounts, because that will segregate these things into areas that can then be on your reporting and help you identify how those are functioning for your business. So that's really the first step, but that happens once, and occasionally you'll adjust that, because as your business grows and you go through this process, you may see that there's information that you're not getting that you'd like to get. And so going back to your chart of accounts, making those adjustments will help you accomplish that. But essentially, there's three steps that occur every month in this process: is tracking income and expenses, reconcile your accounts at the end of the period, and generate financial reports. So tracking income and expenses. Obviously, as you're writing checks or bill pay or disbursements or ACHs, that will be recorded. And there's one tip with using accounting software is you can set up something called bank feed. And that bank feed is when you connect your bank statement or your bank account to your accounting software, and your bank will send download transactions into your accounting software. And then you can set up what are called bank rules. So when it comes in with a certain word in that transaction, maybe Google or Pacific Bell or whatever it might be, it will tag it with the account. Now you have to go in and hit the button to reconcile it, but it'll save you a lot of steps. So right there, that saves a ton of time. But that's one part of the process of tracking your expenses, to set up your bank feed and your bank rules. Then there's other transactions that are extraordinary, that you have to go in and manually identify what they are for, and attach them to a certain account that's in your chart of accounts. Then you also might have credit cards. You might have payments that are for multiple things that will be segregated in your financial statement. So you need to go in and take care of that. So then you may have cash expenditures, or maybe expenditures on a personal credit card. And you want to make sure that you're keeping those receipts and the best idea would be to scan them and keep them digitally in a folder for that period of time, and have those, and then enter that information, or be able to segregate it when it feeds into your bank account. And then there's other things that won't feed that you'll have to do manually, for instance, cash transactions. So you want to keep close track of your expenses. Income is usually not as difficult. That usually comes in only one or two ways, usually coming in through your bank account. The only time that gets complicated is if you receive a payment that may be for different product lines or different products or services that you want to segregate. And then you have to be able, you do that in your accounting software as well. So keeping accurate and complete records of your income and your expenses is the first step in this process. Then reconciling your accounts. You want to, at the end of the period, when you get your bank statements and your credit card statements, you want to go into your bookkeeping program, your accounting software, and reconcile it and make sure it all matches up so that your cash balances are accurate, that your transactions are accurate, that all of your transactions are posted, and that they balance out at the end of the period. And that's very important. If you let that process go on for a few months, it could really be a headache in trying to reconcile it. Now, let me say there's some businesses that have so few transactions that they may want to do this quarterly. That's why I use, say, period instead of month. Some may want to do it quarterly, but by far most businesses want to do this monthly. Want to do this monthly. So every bank statement, every credit card statement that you get monthly, you'll reconcile with the accounting software to make sure everything's in balance, and have that fully balanced. And that allows you then to generate your financial reports. Now, the basics of your financial reports are your profit and loss statement, which is a statement that is for a period of time, usually for the month, and that shows all the income for that period and all the expenses for that income. Now, there's two ways of doing it. There's the cash basis and the accrual basis. I'm not going to go into that in this video. There's benefits of using each system. Accrual is typically more commonly used for businesses. It does have a little complication, but anyway, the basics of it is that the profit and loss statement is your income and your expenses for that entire period of time. And it will show you at the bottom of that statement whether you have a net loss or a net income for the period. You may also want to segregate in your P&L cost of goods sold. So you may have gross revenue, and then if you have expenses that are directly attributable to that product or service that is sold, you would categorize that as cost of goods sold, and then you'd have your gross revenue or net revenue, and then you'd subtract your expenses, and then you'd have your net income or net operating loss at the bottom of your income statement. And then your balance sheet, which is your assets, liabilities, and owner equity, and that's a snapshot. That's taken on a specific day, usually the last day of that period. And that shows you all of your assets, your current assets, your long-term assets, as well as your current and long-term debt or liabilities, and the assets minus liability equal owner equity. So then it tells you how much equity you have in the business, what your business is worth, basically. Well, that's not exactly accurate, just how much equity you have in the business. And that accumulates over time. So those are the two basic reports. Then you'd probably want a cash flow statement, particularly if you're on the accrual system. And that's basically like a check register. It shows you every transaction that takes place. You want to perhaps generate a general ledger that shows you a little bit more information. And then if you have receivables, you definitely want to generate an aged accounts receivables. And that aged accounts receivables will show you what is owed you and how old that debt is to you. So you can see, if everything's current within whatever your billing cycle is, if whatever your terms are, if they're 30 days, how many are current, how many are 30 to 60, how many are 60 to 90. And this will give you an idea of your cash flow projections, and also what customers are good customers and what customers aren't that good. And maybe even product lines you'll see have different receivable periods. So that's very important. And then you want to take a look at your accounts payable. And this will give you an idea of what you have due that's up and coming. So the combination of these reports will give you an excellent picture of where your business is presently and where it is going to be in the near future, based on all those statements. And the key to this is to be able to determine the health of your business and the cash position of your business, because you never want to run out of cash. So you want to make sure that your cash or your receivables are coming in before your accounts payable are due, so you always stay in a positive cash position. So these are all things that we can help you with if you want, or you can do it yourself, or we'll be happy to give you some input and some ideas on how to do it. We've also created a free checklist that you're welcome to download, and it will help you to put these together and make sure that you're not missing any items in the process. But I hope you find this video helpful, and if you have any questions, feel free to get in touch. We'll be glad to help you out.